Okay? All right. I spent so much time on this because this is the crux of how you're going to determine what type of strategy you should use. Now, we're not going to get into strategies today, but we are going to get into chart patterns, which begins that look at trending versus non-trending entries. I think chart patterns is the best way to kind of follow up this discussion of market cycles, because a lot of people still may not be sure how to apply their non-trending versus trending strategies because they don't even know whether they have a non-trending or trending strategy. Chart patterns really simplify this process because there are trending and non-trending chart patterns. So let's jump on over to the PRS and let's take a look at the chart patterns. Now, PRS is available to IBFX clients, so you can talk to customer service about getting this download and running it on your computer. It's fantastic. It scans across multiple pairs and time frames and identifies chart patterns. By the way, chart patterns are simply what? The culmination of trend lines, support, and resistance. Everything in trading, in my estimation, I believe we talked about this the very first day, is I don't care if it's an indicator, I don't care if it's a moving average indicator like my wave. Heck, to a certain degree, I don't care if it's fundamentals. Everything boils down to support and resistance. Where people might be getting bullish, where people might be getting bearish at a certain point in time. That's support and resistance. Buyers represent support. Sellers, or selling pressure, I should say, represents resistance. So if people are buying a certain level, they're supporting that level. If there's a big rush of selling at a particular level, they're representing resistance. They're creating pressure at that level. Okay? So what we're seeing is those actions plotted out. They create those touch points that we see in the chart, and then we connect those touch points, we get trend lines, horizontal support and resistance. If you put those together, take another step, you're left with chart patterns. Okay? So my advice to anybody who's trading chart patterns is always this. Don't go looking for a triangle or a wedge or a rectangle. The great thing about automating this is it takes the subjectivity and the bias of looking for a certain pattern out of the market. The system just simply finds the touch points, connects the dots, and gives you multiple ideas without any bias. Okay? Let me just mention that the PRS is not a system. If I refer to it as a system, I mean like a computer program. It's not a system in terms of trading system, where these are not buys and sells. It is a scanning, chart pattern alert, and chart pattern recognition program. Okay? You absolutely have to use your own filters and your own discretion to choose which time frames, which patterns, even which pairs you want to trade. These are not all trades. These are all potentials. They're all potential. They're all setups, but they're setups that you will now determine whether you want to take the next step on. This is like having somebody in your office who will nudge you when a certain pattern has formed, has appeared. And by nudging you, it's basically taking care of some of the heavy lifting that you wouldn't necessarily do on your own or be able to do on your own because of how time-consuming it would be to scan across 8, 10, 12 pairs across the 15, 30, 60, 240, and daily time frames, recognizing touch points, connecting those dots, and then coming up with a chart pattern. I'm not saying it's impossible, but it'd be very time-consuming. Okay. On top of that, you're trying to keep an eye on what's happening fundamentally by looking at the economic calendar. You might be looking at what time it is and whether financial centers are rolling in or rolling out of the market. And simultaneously, you've got to put in your order entry. You know, there's so many other things we should be doing. Let the system not make the decision for you. Let the program not make the decision for you, but assist you with some of the homework, assist you with some of the analysis. That's what this is. A very powerful chart pattern indicator, if you will. Okay? So I talked about the idea of trending and non-trending patterns. Let's go through this list of patterns that PRS scans for, and then I'll give you an idea of trending versus non-trending and the underlying market cycle that you should have to ideally set this pattern up. Because just just because you have the alert, just because you have the uptrend and downtrend lines creating a triangle or a wedge or whatever it is, doesn't mean that it's automatically occurring in the correct market cycle. Having a triangle does not automatically mean that that time frame of that pair is in consolidation or congestion. It just means that the triangle formed. It just means that the touch points were there to create an uptrend line and a downtrend line. Okay, that's all it means. So starting with the ascending triangle, this is a congestion to consolidation pattern. Often you'll see triangles begin as a distribution market cycle and begin to transition into accumulation market cycle as prices get squeezed by the narrowing range. I call this narrow range in the triangle the narrows. Yes, original, I know. So I call it the narrows. Once you enter the narrows of a triangle, you will most often be in accumulation. In the very onset of the triangle, you'll most likely be in distribution. Again, it's a self-limiting pattern, which means if prices did nothing more than move sideways through the support and resistance of the pattern, within the boundaries of the pattern, at some point it would break out through virtue of nothing else but running out of room. Okay? So in terms of these patterns, triangle patterns, whether they be ascending, descending, or symmetrical, regular triangle, symmetrical, some people refer to these as asymmetrical triangles, but triangles are, again, self-limiting patterns. At some point, they're simply going to run out of room. Okay? All right, so moving on to the channels. Channel down, channel up. These are trending patterns. The name practically screams that at us, right? Up and down. Downtrend, uptrend. I want to find a channel in a downtrend, regardless of the time frame. If I get a 15-minute British pound US dollar channel, I want that 15-minute chart to be in what? 4 to 6. So if I know accumulation and distribution are part of triangles, I'm going to see triangles in what? Usually some sort of 3 o'clock or 2 to 4 o'clock market cycle. 2 to 4 o'clock clock angle, right? Channel up should be 12 to 2. Channel down should be 4 to 6. Again, we're relating this back to which market cycle they should ideally be forming in, because there's no guarantee that just because the pattern formed, it formed in the right market cycle. If any of you have used patterns in the past, chart patterns, and have been extremely frustrated by them, I would say to a large degree, this was the problem. Trading chart patterns in the inappropriate market cycle. Okay? Falling wedges and rising wedges, just again, as the name implies, falling wedges is a downtrending pattern, 4 to 6. Rising wedge, uptrending pattern, 12 to 2. Rectangles are much more, cousins to triangles. Range bound, sideways. Rectangles, depending upon the width or the range between the floor and the ceiling, between the support and resistance, okay, depending upon the width and the volatility they're occurring in, rectangles could occur in accumulation or distribution cycles. Now, determining which the rectangle is forming in is a huge, huge step, because it makes the difference between literally playing exhaustions, fading a ceiling or buying a floor, and waiting for a breakout or breakdown. If you're going to play exhaustions in the rectangle, it should be developing within that distribution market cycle. High volatility, lots of confusion. If the rectangle's narrow, happening in a 3 o'clock wave angle. Okay, again, remember, apply my wave to your charts, determine what the market cycle is, and then determine if the price action is supporting trading one of these patterns when you get the alert, okay? So these patterns, rectangle patterns, can be traded in both a distribution or an accumulation market cycle, but as I kind of talked about before, it's what we do at these levels that distinguish us as traders. Well, what I do at the levels is going to be determined by the market cycle, going back to Charles Dow, going back to my 34 EMA wave. All right? And if you haven't realized by now, that wave dictates how I trade in terms of what I do at support and resistance, more so than anything else that's on my chart. It's my single most important indicator. Its importance is second only to price. It's a